All right, let's get a market update from Chantal Marx, the head of investment research and content at FNB Wealth and Investments. Thanks very much for joining us, Chantal. So Trump has already given his victory speech for his win in the US elections. The market seemed to anticipate that he would win. We see that the US dollar has shot right up against a basket of currencies, which has put the South African rand and other emerging currencies on the back foot. What does this all mean for markets going forward?
Yes, so from about this morning or early this morning, the dollar started shooting up because it started looking like that Trump victory was imminent. And he has now said that he has won, and it does look as if that is indeed the case. So we knew that in this case, the dollar would strengthen, but we think that it could be a short-term impact. Although, depending on the policies that he puts forward, particularly as it relates to trade, this could have a longer-term effect because a lot of the policies that he wants to put in place, particularly with regard to trade, could be inflationary, and that could lead to higher interest rates in the US and thus a stronger dollar.
Yeah. So how do you see all of this? Like you say, right now the dollar is just reacting, and then, of course, emerging market currencies are also reacting to the dollar. But going forward, how do you see this impacting on South African stock markets as well as the actual rand?
So I think when we're looking at the fundamentals right now, the rand should strengthen again after this initial reaction. But a lot depends on Trump's rhetoric around the trade story, as well as the actual implementation, which now looks a little bit more likely to us, especially because you have this red wave scenario where Republicans have also gotten hold of the Senate or regained control of the Senate. If we just look at the fundamentals and what we were expecting, you would have expected this to be very short-term in nature and for the rand to strengthen again. But we know that currencies can be quite volatile and they can react to things like what the President of the United States says.
So the Fed is expected to make its call on interest rates this week. Do you still expect them to go ahead with a rate cut of about 25 basis points, even though, a Trump presidency could invite inflation, as you said?
So I think that the Fed is very data dependent, and with what is in front of them right now, they can actually cut rates because inflation is continuing to move down for the time being. I think the big adjustment might be on the number of cuts from the Fed, particularly going into next year, and data dependency, or it's still being data dependent as well. So I think that that's going to be an important consideration for them. And then inflation expectations. I think when we look at the U.S. consumer, they don't necessarily see what we see when we're talking about inflationary trade policies. So as long as inflation expectations remain under wraps, it does still give the Fed a bit of scope.
And then one last thing, Pepkor, the retailer, they came out with their trading update for the year ended September 2024, showing that their overall revenue rose by 7.8% to 85.1 billion rand. That's despite what they described as a challenging environment. What are your thoughts on this particular retailer?
Yes, it was a very interesting update, more or less in line with expectation. I would say that clothing and general merchandise was probably a little bit softer than we expected, and furniture and appliances was a little bit better than we expected. But overall, in line with expectation. We really like Pepkor. I think that it's a solid company. It's actually attractively priced relative to the rest of that sector. You do have a bit of an overhang because they're still partially owned by the old Steinhoff, and they could continue to sell down on the stock. And then you also have execution risk on a very ambitious growth plan in Brazil. But the South African business is really solid, and I think that they'll benefit from some of the macroeconomic tailwinds we have on the cards, lower interest rates, lower inflation. The two-pot system introduction will also help them, and generally better consumer confidence going into next year.
Excellent. Thank you so much, Chantal, for your time and insights. As always, Chantal Marx, the head of investment research and content at FNB Wealth and Investments.